you've ever put $1 in crypto or left some money in a bank account, you're going to want to watch this video because we could be looking at the market apocalypse. Is that what we're going to see? People are saying a Black Monday. We could see tomorrow. That would mean the bottom of the markets, crypto, traditional markets, maybe housing markets, just completely falls out. And people are scrambling as we go into a recession, the Great Depression, and everything thereabouts. So we're going to be taking a look at what led us to the situation where tomorrow is such a pivotal day. Maybe the most important, well, I would definitely say the most important day of this year, but maybe the most important date in the last 2 years when it comes to crypto. We're going to take a look at Silvergate. We're going to take a look at some other banks that are having problems. And of course, we're going to be discussing Silicon Valley Bank and everything that is going on with that, why people are really, really, really scared today. Now, I want to say this. Don't be scared. Chill. That's what I want to say. In times of turbulence, you need to have a steady hand that helps you from making bad short-term decisions because of emotions or panic or stories, news narrative, sentiment, things like that. Most of the time when people make those moves, it doesn't work out. Sometimes it does. Sometimes when something bad is coming and people are talking about it and then it happens, the people that remove their money, well, they did okay. But for the most part, even when it comes to, the bottom side or apocalypse type scenarios, it still is buy the rumor, sell the news. And I think that what we're going to see is potentially we're going to see things head back in the right direction by the end of the day tomorrow. Now, in the right direction, I don't mean like we're going to moon. I just mean maybe that dip below 20,000 to fill that gap we had last week. Maybe that was the local bottom. And I think there's some evidence to support that. So let's go ahead and get into it. Guys, the first 50 days of 2023, Bitcoin pumped 52%. That is right. That is 1 1/25th or 1.04 percentage points per day. It went up. How about that? Check that math out. Now, it was going up great, but then what happened? Well, this here is what we call the classic, you guys can see that, the classic dragon pattern. Actually, it looks more like a brontosaurus. I take that back. This is the old brontosaurus pattern, as you guys can see right there. In reality, what happens is we can't break 25.2K. And that is the problem. We cannot break 25.2K. And then that led us to get some massive retracements. You can look up here and you can see the actual tops that we hit here. Why is it not working? Oh, well. Right here, anyways, my line is not working, but you can see that right in this area, we bounced off of that resistance several times. And when that happens, you're going to eventually lead to a big dump. So you guys can see what's happened ever since then. There it is. Boom, boom, boom. Some sideways action. Boom, boom, boom. Everyone was complaining about the sideways action. This was the calm before the storm, if you will. So, reminder, Silvergate. What happened with Silvergate? Silvergate Capital Corporation will voluntarily liquidate Silvergate Bank. The company claimed that the bank's voluntary liquidation is its best path forward due to recent industry and regulatory developments. In a March 8th announcement, Silvergate Capital Corporation said the decision to shutter operations was in light of recent industry and regulatory developments, and the plan included full repayment of deposits. Let's see here. This is Andrew at AP_Abacus on Twitter. He said that he was told that to prepare for a liquidation and a shutdown for Silvergate. And that's where we're at. It actually did happen just like that. The market started panicking a little bit. Bitcoin started to, it was right around this time right here. I don't have the exact date of it, but it was right around here. I think these 4 candles where the Silvergate news was going on. So it did have an effect on the market. Not super dramatic, not like a 20% dump or anything like that, because a lot of the Silvergate stuff was already built in or baked in. However, there was some contagion. We're seeing some bank contagion now from Silvergate that is actually affecting traditional banks even more than the crypto markets right now. So we had a lot of bad news several days in a row. We had this. Jerome Powell says interest rates are likely to be higher than previously anticipated. They're now targeting maybe 6% by the end of the year. However, there could be some things to reverse that. We'll talk about here in a minute. In their December estimate, officials pegged the terminal rate at 5.1%. Powell did not specify how high he thinks rates will ultimately go. Stocks fell sharply while Treasury yields jumped after his remarks were released. That's because that's favorable for the dollar. That's why the bond market jumped. Then we had this, the job report. We just can't get that thing going in the right direction. Jobs report, U.S. economy adds 311,000 jobs in February as labor market stays strong. That's not what you want for a recession. February jobs report showed more than 300,000 new jobs. Let's see. Unemployment rate ticked higher to 3.6% on a rise in labor force participation. So basically, more people got out and started working this month, maybe after those, or last month, after a certain amount of time, maybe of not having a job or looking for a job. Maybe now they've got one or they're doing something temporary. And so that's why we had a higher rise on the unemployment because more people came back into the workforce. Those numbers are all fraudulent, by the way. You guys know the way they track unemployment. It's really ridiculous. Just like with inflation, they're always trying to reinvent the wheel, so that way you don't realize how bad it is. Here is the U.S. labor markets. This is total non-farm payroll. So outside of farmers, this is what that looks like. This is the unemployment rate. You see it's been very even for the last several months. The pace of job growth is surely still too rapid for the Fed's liking and won't stand in the way of the Fed continuing to push rates higher. But we haven't really seen that language for them saying, it's imminent, we're going to raise 50 bips. There's a lot up in the air on that. Then we had this news. President Biden calls to double capital gains tax. This is absolutely insane. From 20% to 40%. I think that's only if you make a certain amount, but I'm not really sure. I'm guessing no matter what. Given that the Republicans now control the House, the said proposal has a little chance of passing. I told you guys this the other day. It's posturing. Proposal by and large echoes Biden's multi-trillion-dollar Build Back Better economic package. They projected that Biden's budget would cut down $3 trillion via increased revenues over the next decade. According to Biden's proposal, the richest 0.01% of Americans would pay a minimum of 25% tax. Simultaneously, the top tax rate will also be increased from 39.6% to 37%. It will reverse a lot of Trump's tax cuts. Biden's proposal calls for investors paying at least $1 million to pay 39.6% on their long-term investments. Government trying to get that money. And let me tell you something else. Obviously, this is posturing. This isn't going to pass. But it does feel like what the government is doing right now at the highest level is exactly what Gary Gensler's plan was, along with the OCC. Deter people from investing in crypto. We're not going to make it illegal. Just convince them it's not good to do. Well, if now you've got $1 million, let's say, which is a good amount of money, but you make, $200,000 on that $1 million, and then you owe like almost half of that back to the government, doesn't sound like a very fair system, if you will. And we also have this news. Ethereum, maybe a security. Either hits 2-month low as Letitia James, the New York AG, labels crypto token as a security. Now, I don't know what her authority to call something a security is. I think it's just in a civil case. I don't necessarily think she can do it, that she can actually label it as a security federally, maybe in, for the New York Department of Financial Services, but not federally. Crypto token Ether fell to its lowest in 2 months on Friday after the New York Attorney General labeled it as security, bracketing it with assets such as stocks and bonds, fueling fears of a wider regulatory crackdown. Letitia James on Thursday referred to Ether as a security in her lawsuit against KuCoin. The situation with Ethereum could get really ugly. Investment research firm said crypto industry and regulators have been in a tussle over the categorization of crypto assets as securities. So we just got like a lot of bad stuff happening. We've got real bad things like insolvencies, banks collapsing, frozen deposits. Then we have things that are like kind of macro bad, like regulation doesn't look like is going the direction that we want it to go. I still think ultimately it will. But you're seeing a lot of posturing. And you see this in these FUD campaigns. It's where it just seems like all the negative is news and all the news is negative. And usually when you see that, it's orchestrated and it's getting ready to break the other way. Now, let's talk about Peter Thiel. He is part of what is known as the PayPal Mafia. It includes Elon Musk, and I don't know who else it includes. I just know those two guys. I think there are some other ones that you would probably recognize. But I don't have them right here in front of me. The important part is Peter Thiel is a big investor and he wins a lot. Well, he's advised companies to exit. He advised companies to exit Silicon Valley Bank. Now, of course, a couple seconds ago, I restarted like this was going to be an edited video, but it's not. So I'm sorry that was awkward for you. I'm just going to keep pushing through though. Peter Thiel told all his investors, get money off this bank. It's not going to be good. Now, he himself withdrew a bunch of money from the bank as well, I believe, just a couple days before it went insolvent. Let's see. Founders Fund, a prominent VC firm co-founded by billionaire Thiel, has asked his companies to move their funds, according to one familiar with the matter. Let's see. Coatue Management, Union Square Ventures, and Founder Collective advise their portfolio companies to pull their money from the bank. So I don't know. Now, could there be a potential clawback? I don't know how this works with this, as opposed to a platform where you have crypto. But either way, he was warning people, and a lot of people think this is what actually started the bank run to make SVB, Silicon Valley Bank, insolvent. A lot of people say, ultimately, Elizabeth Warren started all of this by causing a bank run on Silvergate a couple weeks ago. I don't think Elizabeth Warren is that powerful, to be honest with you. Okay, so we got this update. SVB deposit outflows are outpacing the company's sale process. Now, this would have been on the 10th. This was as things were kicking up, the things that were really starting to, sound alarm bells for people. And, shortly there before, they said they were in financial talks to sell rather than to raise capital because nobody wants to give capital to a sinking ship, except for Kevin O'Leary. So this is what happens. Silicon Valley Bank is shut down by regulators and biggest bank failure since global financial crisis. Financial regulators have closed Silicon Valley Bank and taken control of its deposits, the FDIC announced Friday. It was the largest U.S. bank failure since the global financial crisis more than a decade ago. And here's just taking a look at this. These are the size of bank collapses since 2000. You see Silicon Valley on the right. Washington Mutual collapsed in 2008, which is right here, as may be the start of the orchestrated great crash of 2023. Get cash out of the ATM machines tomorrow because there may be no cash left tomorrow. I don't know if that's true or not, but never hurts to have your cash. I would say that. But you got to be careful because if everybody goes and takes their money out, the whole Ponzi scheme comes down. I don't know if Bitcoin's ready to take over yet. So, if America actually did do a bank run, I don't really know what the effect of that would be because basically every bank is probably over leveraged against other banks. And so it would certainly start once again, the dominoes falling. But ultimately, it's not like you're going to go to the bank and they're going to hand you your cash. It's not going to happen. They don't have it. They already don't have it. Even if everybody else didn't go do it and you did it by yourself and you had $100,000, your bank can't give you $100,000 cash in a short period of time. We've got to give our bank 5 days notice to get $5,000 out. It's absolutely insane. The collapse of SVB, a key player in the tech and venture capital community, leaves companies and wealthy individuals largely unsure of what will happen to their money. All right, so let's keep on going here. Now we've got the crypto fear and greed index. Right now it's at 33. I don't know when the lowest it was recently was. Let's see here, 34. So since February, that's what it looked like. Let's go a year. So we're still much higher than we were for most of. It's time for you to take a shot, by the way, of coffee, of course. Take a shot of an energy drink or a coffee when you're on. Guys, I don't come to the office to make videos on the weekends like this. But this video is very important. I really want you guys to understand what's happening and to really see the big picture here. So that is why I'm here by myself making a video with a screen. No editing on this video. I'm just going to post it as is. And, it's kind of thing where this is too big to unpack with a phone record video. And I don't have people here set up to do a whiteboard video or anything like that. So I hope you guys are really taking in what is going on here, because it's going to lead us to somewhere tomorrow. And it's a big question mark on what that's going to be. Bill Barheit of Abra says it's not a great day to be a bank in the U.S. There is now widespread fear, not panic, over bond market losses. What's happening? Basic facts: banks hold less than 1% of liabilities as physical cash. Told you that for a long time. They got rid of the fractional reserve banking, so they have to have like 10% on hand or something like that. Banks are overexposed to bonds. It's problematic with rising rates, such as 2022 and 2023. Rising rates means falling bond prices. In a liquidity crunch, you sell bonds at a loss. Somebody's got to cover the loss. And guess who usually it is? Clients, shareholders. Most banks are affected as they all do the same thing, buy treasuries. Silvergate went into liquidation after Senator Warren caused a run by tweeting that the bank wasn't solvent, forcing them to sell treasuries. Interesting. Gary Gensler's best friend, Elizabeth Warren. SVB is up next, as ZZ clients are telling their companies to get out of SVB, which means a run is likely underway. As the number 18 bank in the U.S., Fed cannot let them go under. They'll be forced to step in if the FDIC does not. As of now, it appears investors are. We don't know how far the bond contagion will go, but problem clearly extends far and wide. So, look, this is what this is ultimately leading to. More quantitative easing and lower rates. You don't think there's something to this, that this week Jerome Powell says, we think we're going to have to raise the rates higher, and then you get collapse after collapse after collapse. It's almost like somebody's trying to reverse those rates through causing disasters, and where people are getting hurt, not just the banks, but individuals as well. And this may make the Fed decide, hey, we got to step in and do something different here, and kick the can down the road a little bit longer, which generally they tend to do. So what happens? After SVB collapses, USDC lost its dollar peg. So why did it lose its dollar peg? Well, because $3.3 billion were locked up on SVB. Let's see here. It dropped to as low as 84 cents moments after the descent of Silicon Valley Bank, a major partner to Circle. That bank was a partner to Circle, which, of course, behind USDC, Goldman Sachs as well. The collapse of SVB roiled, what a word, major markets, some financial institutions getting affected. Like I said, $3.3 billion of USDC was stuck. Following the confirmation at the end of today that the wires initiated on Thursday to remove balances were not yet processed, $3.3 billion of the $40 billion of USD reserves remain at SVB. About 25% of those reserves are held at 6 financial institutions, five institutions plus SVB itself. Part of the lenders collapsed, causing a depeg. The stablecoin market capitalization dropped over 9%, $37 billion. Circle is currently protecting USDC from a black swan failure in the U.S. banking system. SVB is a critical bank in the U.S. economy, and its failure without a federal rescue plan will have broader implications for business, banking, and entrepreneurs. Now, here's something that's really interesting. You want to get a little conspiratorial here. Just last week, I was in Washington, D.C., and I was at the Heritage Foundation, and Jeremy Allaire's son, the CEO and founder of Circle, was railing against stablecoin or against CBDCs, saying they're a bad thing. Yet, from all appearances, it looks like Circle is trying to position USDC as the CBDC, as the digital dollar. We got a video coming out on that probably in the next couple of weeks, but it's almost like too coordinated. It's almost like too coordinated, where you've got Circle now in a really tough position where they may actually have to go through a federal rescue plan. Well, federal rescue plan, what does that mean? Oh, the government gets their hands on all the USDC, and now it's theirs. And now they can switch over to a digital dollar, which is the real cog in the machine that's going to help stave off this recession, this Great Depression for at least several more years, is they want the markets to be strong for the presidential election next year. There's no doubt about that. Circle plans to cover mass liquidity in Silicon Valley Bank with corporate funds. Let's see. They're going to use corporate funds to cover the shortfall. Liquidity operations for USDC will resume as normal when banks open on Monday morning in the United States. This is what we're waiting on, guys. We are waiting on tomorrow morning to see what happens in the United States. Will we get a Black Friday? Will it be a nothing burger? Will we get a day like the pandemic crash on March 12th of 2021, where the price, or was it 2020? It was 2020, wasn't it? That's right. Wow. Will we get the pandemic crash of 2020, where it dips way down and then bounces right back up? I don't know. I tend to think I don't think we're going to see that. I think because everybody's counting on it, I think that's why it probably won't happen. It seems like a black swan event would be when nobody saw it coming. And this has been a slowly turning story here. So I tend to think a lot of the price action right now is already baked in based on what could be coming on Monday. All right, so Robert Kiyosaki, Rich Dad Poor Dad, warns third U.S. bank to crash. Peter Schiff says a bigger crash is ahead. Of course he said that. Peter Schiff always says there's a big crash coming. So, the U.S. banking system is on the verge of a much bigger collapse in 2008. This is, of course, Peter Schiff. Banks own long-term paper at extremely low interest rates. They can't compete with short-term treasuries. So there you go, expecting more bank failures. And then Robert Kiyosaki warned about a third collapse. That's right. I did have a hair on my tongue. About a third collapse comes to speculation around the future of another crypto-friendly investment bank. Credit Suisse continues to mount. We're going to look at some of these troubling banks here in just a moment that could be next on the list. Banks down. Well, that's why Bitcoin was created, the crypto community says. That's why I believe that if we do have some kind of mass closure of banks or bailout of banks, what we're going to see is that Bitcoin is going to get that's going to be a benefit to Bitcoin. Bitcoin, even if everything else is crashing, if the reason it's crashing is because everything that we've all said about banks are true, and that's why you need to move over to Bitcoin and crypto, then ultimately that should benefit the market. Maybe not the first day, but it will. Jim Cramer advised people to buy Silicon Valley Bank stock a month before its collapse. On February 8th, he said this company is a merchant bank with a deposit base that Wall Street has mistakenly been concerned about. Adding the stock is still cheap, despite being up 40% year to date at the time. Fast forward to a month later, on March 8th, now they planned to dispose over $2 billion in new shares. Let's see. Regulators need to step up. FDIC is stepping up. Of course, Cramer, very famous for a lot of his bad calls, but you know what? You're only as good as your last call, whether it was good or bad. So what could we potentially see from here? Like, what are the next dominoes and the next chips to fall? Just in, over 200,000 UK firms won't be able to pay staff due to Silicon Valley collapse. Wow. That means 200 companies in the UK were using SVB in order, or somehow through a series of, maybe some leverage through other banks. Then they had exposure to Silicon Valley. It doesn't matter. The point is that whether it's with them direct or not, 200 firms aren't going to be able to pay their employees because their money is frozen. And so we've yet to really see how this is going to affect, international. And that may be our first clue. We do know that the regulators in London and the UK are really trying to figure out what's going on there because they're really nervous for a lot of their citizens. Treasury Secretary Janet Yellen says government will help make SVB depositors whole, but rules out bailout. Interesting here. Let's go ahead and click on the story here. Janet Yellen confirms help for depositors, but dismisses bailout. Let's see. On speaking to CBS Thursday, she sought to assure U.S. customers that failed tech lender that policies are being discussed to stem the fallout from the collapse this week. FDIC has been working with the bank as well. Let me be clear that during the financial crisis, there were investors and owners of systematic large banks that were bailed out. We're not going to do that again. That's what she said. But we are concerned about depositors, and we're focused on trying to meet their needs. So we just have to see how how much further this goes, because there certainly could be a point where if there are other major corporations like Roku, I heard Roku is really exposed in this. We should look that up real quick. Roku had a lot of exposure to SVB. It's a tech bank. Let's see here. I always want to call it Silvergate, but it's not Silvergate. It's Silicon Valley Bank. Roku says $487 million of its cash, or 26%, was held in failed Silicon Valley Bank. Of course, you got to diversify not just your assets, but where you hold them too, so you don't end up in a situation like this. We also have this short seller, what is this here? Yep. Short seller who predicted FTX, Silvergate Capital collapses and shorted SVB Financial as a new banking target, a worldwide money laundering story. Now, this is from Mark Cohodes, who I spoke with when we were doing some of the FTX investigation into Sam back at the end of October. He worked with me and Gretchen Morgensen on putting out a good Gretchen Morgensen of NBC News put out a great article detailing who Dan Friedberg is, detailing what was going on with FTX, things like that. He's very passionate about going after these people. I think in some ways we're very similar. He does in really the traditional world, what we do in the crypto world here. But he says there is way more room for Silvergate to fall, giving it a value of 4 cents to 14 cents. He said it was a publicly traded scene. A publicly traded crime scene, saying Silvergate may go down even further. But he's glad that the government is shut down the SEN network, or the Silvergate Exchange Network. And that, of course, had that effect on the price. Let's see here. Media wants to make it a crypto story, but it's not. It's a worldwide money laundering story through these two networks with a crypto wrapper. Let's see here. Is that Cassius Covey, a crypto wrapper? Sam Bankman-Fried, FTX, and Silvergate downfall. Network conspirators. Let's see here. Where is it? Here we go. Silvergate, looking at maybe Carvana. Now this one, here it is. Okay, so Gahode says that he hopes the government steps in and does something, specifically shutting down the Signet network from Signature. Now he's talking about Signature Bank. It actually took some of the business that Silvergate left behind when it went, when it got liquidated. So, Cahodes has been gathering all this information on Signature, and is it as bad as Silvergate? We don't know yet. But Mark Cahodes seems to think there is a lot of fire where there's smoke here, and he's been working to kind of expose it. He says he's really bitter on this. Let's see here. He shorted the stock last year of SVB, but covered it to go deeper in a short position in Carvana, yada, yada, yada. Basically, here's the thing. The reason why Silvergate and Signature are pretty similar is they both have kind of this third-party network that exists within their banking infrastructure, but it's also, I believe, it's its own company. Silvergate used the SEN, Silvergate Exchange Network. Signature uses Signet, which is basically doing a lot of the same things, making sure all the transactions go through. However, it was discovered with the SEN and Silvergate, a lot of those transactions are likely fraudulent and they didn't actually happen. So if they were to go into Signature Bank to Signet and find this out, could be pretty concerning. And the other thing to think about here is that when it comes to Signature, there in the last 24 hours, supposedly, there are people saying they've been having problems doing transactions on Signet. So we might already see Signature Bank kind of tightening up around this. So we'll let that play out. Credit Suisse, another bank, guys. Credit Suisse stock plunges. Annual report delayed after a call from the SEC. So they got a call from the SEC. They delayed, their report. And this came out. Another Credit Suisse client revealed as boss of a Russian criminal group. It's just so satisfying to see all the things that all these traditional finance people have been saying about crypto for years and years and years. And we've been telling you, No, actually, the traditional finance is worse. The bad crypto actors just borrow what the traditional finance people do. Here it is, guys, right in front of your face. Russian mob, organized crime boss, another client of Credit Suisse, and they'll get a slap on the wrist for this. So with all these banks kind of in flux here and all in trouble, the question is, are we on the verge of another Lehman Brothers type scenario? The Lehman moment, they might call it. Trading in First Republic, Signature Bank, other regional banks halted after SVB collapsed. So not only Signature Bank, but also First Republic and some other ones as well are facing some heat right now over all this. Let's see. In what could bring back the memories of 2008, Lehman Brothers fall for the global stock markets. U.S. banks were halted. Some regional banks were halted on Friday amid a massive sell-off. The market should be able to control itself, but the government had to step in and basically make them halt, all of their activities while they figure out what's going on here. Now, are we going to see this, guys? Lehman Brothers fell 45% in 2008. Are we going to see something similar where we're going to see all of these insolvencies, all these collapses, and before you know it, the entire banking infrastructure of the world, it's flipped on its head? So what people are thinking. People are thinking worst case scenario. They're thinking tomorrow, it's going to be Black Monday. People are going to lose their jobs. People are going to lose everything. Could happen. We could see some of that. There will certainly be some of that, but we don't understand the full repercussions of exactly how far the SVB net goes. And remember, when it comes to banks, traditional finance, they're always leveraged on top of each other. So you owe money to this bank, who owes money to this bank, who owes money to this bank. And every bank that's in that chain is susceptible to what is going on, with the insolvency. Not being able to get access to their money because Peter Thiel, he pulled it all off first. But I don't think we're going to see a massive disaster tomorrow. We certainly could. I don't want to discount that. I don't want you to not be prepared. We can see an absolute financial disaster tomorrow. I think it'll start out pretty bad in the morning. I think after lunch, things will calm down. We'll find some footing. Bitcoin may test 19,000 again before going back up, maybe go down to 18,000. I tend to think Bitcoin will, maybe hover somewhere between 19,500 and 20,500 for the next few days. We do have the daily close or the weekly close tonight, so we got to see what happens there. If it closes above 21,500, then that's bullish. Kind of don't think that we're going to do that because the price right now and all this contagion stuff just floating above our heads. Just remember this. The smart money never does what the masses do. The masses are doing what they think is best. The insiders are doing what they know to be best when it comes to, practices around buy the rumor, sell the news, just watch the chart. Don't get sucked in to watching the news and then, your portfolio plummets because you weren't paying attention. Don't get all wrapped up into that. Just do the next right thing. Don't make decisions based on emotions. Don't make decisions based on panic. If you are panicked a little bit right now, maybe you're way overexposed, go find somebody you can talk to and, just share what's going on with you. Share that hardship. And sometimes that can be enough to help you talk it out with another person to make good decisions. So you guys down below in the chat, let me know what you guys think about all this. Where are we heading this week? I haven't seen a week where I feel more unsure of where we're at on Friday than this one right here. I tend to believe we're going to get stuck in between 20,000 and 25,000 for about another 6 weeks or so. It could move dramatically one way or the other, but I think that could be what we see. This is what we saw in previous bear markets, a lot of accumulation. It should encourage you guys who don't have a lot of great positions, though, because maybe you came in late in the last market or you came in at the top and you lost your money. Looks like now we're still going to get more time to accumulate as all this stuff kind of plays out. And there could be better prices on the bottom. But we've already made our decision that we believe the bottom is in. So if we did go back down to a new bottom below $15,000, we would probably have to adjust that plan. But until that happens, we're going to stick with what we've called and talked about all year or for the last 1 year because it's been deadly accurate. So drop those comments down below. That's all I got. Be blessed. Bye-bye.